Hello, traders. It's 8:02 a.m. Chicago time on the 30th of January 2018. It's Tuesday. After an interesting trade on Monday, markets in the U.S., at least the indices are selling off. Looks like allocation is to safety somewhat today, even though the bonds are taking a bit of a smack, just a little bit. 13 ticks. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. I put this second slide up that you're looking at here just so that you know who I am or what my background is. I know there's, I've been doing these videos for about 5 years maybe, and I know many more people are doing them, and I wanted to make sure you're aware of where I'm coming from. It's important to know what the context is of the person who's speaking. Again, looking at the quote board for the overnight, it looks like everything is lower. The ES has sold off from the 2-day balance. Yesterday was an inside day in the ES, and we're trading below it, currently 28.34 and a quarter. The S&P minis are down 19 and a quarter points from yesterday's close, trading 3 times the volume. So again, allocations to risk and out of allocations to safety and out of risk this morning. Not seeing any clear news or a news event that's causing this. This looks driven more. Driven more technically, for the most part. It's something we had talked about in that I'd said on yesterday morning that the market is getting a little bit toppy, and the primary trade yesterday was to the short side. I'll show you that in a second. In fact, let's go right to it. But just so we are planning ahead. Just a couple minutes ago, we got the Case-Shiller numbers. Those are the key numbers for the day. We're also getting Consumer Confidence Index for January, expecting 123, priors 122.1. That comes out at 10 o'clock Eastern or New York time. I don't see anything else on the calendar that is likely to push us around. The FOMC starts their meeting at 9 o'clock Eastern. Starts their meeting, and we get a conclusion tomorrow. Tomorrow's a key day for that next announcement. The market's not expecting any surprises there. Let's review what we talked about yesterday. Here's the primary scenario. The scenario I talked about yesterday, including showing you my execution platform to show you how I might find a spot to lean on. I was looking for some responsive buying on the open, looking for sellers to step in, and was targeting down into the consolidation at 28.54. Expected some support at 63 in the 63, 62 area, and then again at 28.57, if you recall, 28.57 being the area that I was shooting for. Extended targets would be down at 26.40. 26.40 is a large magnet. As I said yesterday, we just hit it this morning and pushed through just now. Again, we're trading 28.33 half. Right now, we're pretty far below where we closed yesterday. Again, yesterday was an inside day, but this was basically on point, including the areas where the market saw some restraint. As I said yesterday, the short-term and intermediate-term time frames were expected to be in control, and they were in the morning, and it looked very, very clear to me. At least this doesn't it used to happen pretty much every day that I'd have clarity of movement and ease of read on the context. But as is normal with the market's volatility crunching down, it becomes harder and harder. The VIX has perked up a little bit. It's yesterday it traded above 13. The VIX has been down as far as 9 or a little bit below. So quite a big swing in volatility there, or insurance buying in the options. The secondary idea was for the market to drift away in an initiative manner away from the prior day, and then become responsive later on and start to move up. That did not happen. Here's what we got yesterday. A lot of these days now are give me a lot of Renko bars. I use a candlestick. I know that's contrary to what people do with Renko, but when I get a lot of Renko bars, we have a pretty good amount of movement, and I see pretty good opportunity. Notice this here. I posted it yesterday. It is a profile. This is something that's very proprietary to how I look at things. This is a profile of the zipper that occurred on Friday, the rest area on Friday, right here, before the continuation. And I talked about the market very likely stopping or pausing right in that 63, 62 area. But if you pay attention to this line here, this is the point of control of this zipper, of this consolidation. Just pay attention to that as we move along. So here we have an opening swing. The market pushed higher, found sellers at 67.50, pushed lower, found buyers. Its first buyers at 64.25, and then we basically get responsive. This is still scenario number one, almost exactly as expected. Again, scenario number one looked like this. So there it is, pushed to 28.70 or so. Oops. Pushed to 28.70 or so. Okay, and what it actually did is it pushed to 71.25. That was our IB high, and then it breaks through the mid, makes another attempt at the high, and there's the continuation through the mid. And so scenario one's in play, looking for shorts, but not definitely not overstaying them. And again, watch this maroon line here, the point of control of this zipper. Okay, as we move along, retest of mid, push through to that point of control there, consolidate. See how it's consolidating? It's consolidating right here, just like it did right there. This is very much expected in auction theory. This is a very orderly auction so far, with the short time frame in control. Gives us a bounce right to mid again. Beautiful test of the mid there, mid VWAP confluence. Okay, and then we expect it to push through. There it is. There's the push. And then what does it do? It comes back. It pulls back to this low, which is right inside this consolidation. There's a reason the market consolidates, and it behaves a certain way in those zippers that we can take advantage of. I talk about that quite a bit. And we continue to consolidate. The market, at this point, I expected it to start turning higher. I expected it to retest 63 and take it out. It had extended and is starting to push through. Again, this is not hindsight 2020. I'm playing the chart. I'm narrating it as if I'm a superhero. These comments occurred on Twitter in real time. You can check those just so you can follow along. The reason I'm doing this is so you can follow along in my logic, and it's not right all the time. It doesn't have to be in order for me to make money. I don't have to be right all the time. It's about positioning and sizing. So there's the retest through the mid, and then the market consolidates into the close, expecting it to pop up still, but it continues to sell off. It's unable to find buyers like it normally does. So it closes away from mid, away from VWAP and the IB, outside of the IB. The value area is elongated. The value area is elongated, and there is no clear consensus of value here. We don't see true value, even though we don't see trend either. We have a long stretched boxy profile. It tells us that both sides were really trying hard to find an edge, and they could not. The sellers were dominant yesterday. The overnight session, oops, that's not the chart I wanted. The overnight session opens up and then it drops off right after the Asian Open. We immediately drop hard. The volume in the overnight session is 350,000. That is 3 times the size that that we would normally expect on the overnight session. Very active overnight session with a clear distribution lower. The overnight session, is as much as it looks like it is just dominated by sellers, they did spend a fair amount of time balancing, and they formed what looked like an unfair bottom right here, with a bounce to mid, unable to take mid, the overnight mid, and now sellers are back in control again. So there are some pretty strong waves coming across, just fundamentally across the globe, that we're seeing in Europe and so on, that are partly driving this, including the way the US dollar has been moving, as well as the treasuries. If you have not looked at a bond chart or a 10-year chart, you might want to take a peek. So that's what we've got from the overnight session. The overnight session seems unable to recover any of its losses. So we're pushing near overnight low. We're approaching last week's low, and we are below the balance from last week. So here's the balance of last week right here. It's this red profile, and 2840 is the key magnet still. Okay, that's the key magnet. And so this morning the expectation is open auction out of range. I'm expecting it to push to be initiative at first. I expect it to base. I'm looking for the first impulse to be up instead of down. And I'm looking for continuation 2840 before balance. Okay, looking for a continuation to 2840 before balance. That is the key. That is the key trade of the day. Does that make sense? Why? We would be approaching the extreme of last week's balance. We have not tested this key balance area. Look at how predominant how big this profile is, and we have not tested it yet. So 2840 and a quarter, 2840 even is a key area to test above. If we do continue to sell off, then expecting volatility to increase, expecting range to increase, and expecting continuation down. The alternative is an open auction that gets responsive early, is unable to hold 2840. Sellers come in, we get an impulse down. Then I'm looking for 20 below. That's the key area down below from 40. From 40.41, I'm looking for 20 as the key target, and then we're back, and we are trading this template day down here, the triple distribution day, from which we get to 28.20, and then it's likely to rest and pop up into the close. So how does that translate, right? How does that translate? How do we trade that again? Again, once I define the areas of importance, now I'm looking for how the market responds up here in the 2840 area up here. I'm looking for, let's see, why is this cut off like that? Not sure why it's cut off. So I'm looking for areas where the market is likely to respond, to come in and step in, and then I would lean against those areas. Look for how it prints. How do I see how it prints? Here's what I do. When I'm ready to engage, see these dots? A lot of dots on the offer. Some big ones, some big green ones. Those are buyers. The red line is the offer. The green dots are trades on the offer. This is why it's really nice to have this all summarized in a heat map. And contrast that with very poor prints on the bid. This is a market now. If we're pushing into this area here and I see this would be a trigger long, and I know at least in most instances, at least I might be able to get 6 ticks to 2 points out of this. So you could see how that worked out right here in front of you. We get a market. So back here, same thing. A lot of activity on the offer, very little activity on the bid, and then the market starts to push real quick. Okay, and then all of a sudden the activity on the offer ceases right here, and then it picks back up again, and so on. We see this all the time, and that's where you're just reading order flow, and I don't think anything makes it clearer than this product here. But that's what I'm looking for. I'm looking for I've defined through my plan what areas I'm interested in, and then I look at this S5 book map and the heat map to actually execute, so I can put it all together and see in the moment where things are, so I can try to get an advantage. See that print? See those prints on the bid? This is likely to continue lower from here. That's the way it's shaping up. So if I'm looking for a short and I start to see that, then I'm looking to hit the bid and expect some follow through, right? That's just an example of how that works. Anyway, I'll leave you with that. Good luck today. I hope that you're gaining something, learning some little thing every day that's helping you win the day. Every day that you're here. Good luck, and I'll talk to you soon. Take care.